Welcome back. Let's get into that market picture now. And we start off in the Far East, where Asian markets rallied this morning as comments from a top Federal Reserve official were pounced on by investors as indicating that the central bank will unveil a deep interest rate cut at the end of the month. John Williams, the influential vice chairman of the Fed's policy setting board, said in a speech that central banks should move quickly to support the economy when borrowing costs were already low. He pointed to studies suggesting that when there are few stimulus options available, officials should move more quickly than otherwise might rather be waiting for disasters to unfold. The Nikkei in Japan picked up 2% today, while the Hang Seng in Hong Kong moved up around 1% as well. The Shanghai Composite 0.8% higher by close. Quickly move on to Wall Street now, where stocks finished higher on Thursday, snapping a two-day skid following dovish comments from that top Federal Reserve official that shifted attention from mixed earnings. Major indices were in the red through early afternoon, but rallied after New York Federal Reserve President John Williams said that, of course, acting quickly would certainly help. The remarks further boosted expectations that the Fed will cut rates later this month. The Dow Jones Industrial also headed higher today, with the broad-based S&P 500 gaining 0.4%, while the tech-rich Nasdaq Composite Index advanced 0.3%. Let's quickly chat and check on these European markets then as well there. As you can tell then, you can actually see then as well that the markets have certainly been quite interesting. A whole host of green there, with the FTSE 100 headed higher as well out in London. The DAX in Germany and the CAC 40 out in France have as well gone quite high on that front. Locally on the JSE as well, some positive market movement initially for the JSE, but that has certainly not filtered to the market the way one would have liked. So the JSE itself has certainly gone higher now, above that 58,000 point mark. Some positivity coming through from Asia as well. Quickly checking in on the resource counters then, those have certainly headed higher as well. So some positive shifts have moved along when it comes to those. The commodity stocks too certainly doing well. If we continue to change this up, platinum there in the commodities has gone higher, $855 an ounce. Now oil headed higher, but considering that it was sitting at around $62 a barrel, not too much to write home about. And your currency is 13.93, around a 10-cent fall for the South African currency, ever since, of course, the pronouncement by the public protector that indeed the president may have misled Parliament, and that has certainly affected market conditions for now. And the rand weakening, 13.93. Let's head on over now to chat to Warwick Lucas then from Galileo Capital about the market picture and certainly how things have fared thus far in the day. Warwick, appreciate the time. Thank you so much for it. I suppose you could start off with the MPC decision, but there's also just been news, of course, the public protector that's shifted the currency along. Do we really know where the rand is going to settle? We just hope and pray that no more own goals, really. And it seems like this morning we may have seen ourselves score another one.
Well, certainly a lot of noise into the pot there, Abile. So for sure, quite a lot to digest. I think one of the things that I find a little bit curious is the discussion on how the interest rate cut is related to the rand. Some discussion coming in that because the SAB only looked at the 25 basis point cut and nothing else, that was a basis to say, well, that the SAB is actually hawkish. I don't agree with that. I think I pointed a few weeks ago on this newscast that a rate cut would actually strengthen the rand on the basis that the expectations of this looseness would actually provide some economic relief that would then reduce the risk of a ratings downgrade in South Africa, and I still stand by that. And I think that the market basically took that kind of a view in responding to the rate cut. So
another rate cut maybe later in the year, you think?
Look, I think there's grounds for it, but SAB certainly seems to be staying on a tight footing, which I agree with the sentiments there that monetary policy cannot be expected to lift the economy. That's absolutely correct. But in counter to that, I mean, there's certainly plenty of literature and experience out there that a reserve bank that is too tight can do a lot of damage. And I think the economy really is at stall speed, and SAB is being frankly, too timorous.
Yeah.
They need to cut more.
One hopes that they actually get that message and perhaps are able to help in some way or other, even though it's not the first port of call.
Sure.
If we touch on then the chances then of the Fed cutting, I mean, that seems to have come a thing. John Williams earlier on yesterday actually saying that it's time to act quickly, and reserve banks and federal reserves should act quickly to boost economies that are struggling, much the same as the US's very own, which is slowing in terms of growth.
He's not wrong. I mean, the nowcasting from the likes of the Atlanta Fed is indicating quite a sluggish US GDP figure going forward for the rest of the year. I mean, we're looking at 1.5% according to that. And he's also not wrong from the point of view that if you get behind the curve, it can actually be very difficult to get in front of it, especially when you are running such low rates as is already the case in the OECD. So, yeah, he's not wrong, and it's going to be interesting now to see if that does indeed lead to a 50 basis point cut instead of just a 25. I guess I would be somewhere in the middle. I mean, definitely 25 coming. 50, now it's on the table.
Yeah, certainly is. Okay, let's talk about that oil price then. We had an Iranian US drone shot down by Iran not so long ago. This time around, we have an Iranian drone being hit down by the US Navy as well. Middle Eastern tensions filtering through to that oil price, so much happening.
Tit for tat, certainly. Although apparently it was electronic warfare, so they didn't actually pot at it. It was they buzzed it down, allegedly. The Iranians apparently didn't lose a drone, so they say. So I think what is quite telling there is that we still have an oil price that's not really responding that much. I mean, when you consider that overall the trade tension is still dominating the discussion in the oil market. So that's your key driver. So, and I also would suspect, looking at how they've responded, or certainly how the Iranians are responding, insisting that they didn't lose a drone, that they're actually still trying to tread quite carefully there, not let this this whole tete-a-tete get out of hand.
Yeah. Very quickly, let's finish off with some equity news then. PepsiCo looking to buy into or buy the remaining shares of Pioneer Foods, essentially buying them out. How significant a deal is that, and what does that mean for the local market?
Okay, so I think what is important is, firstly, PepsiCo had an existing relationship with Pioneer Foods carrying a number of their lines already. However, what it does point towards is that as South Africans, we've got very despondent about our own country and our own assets. They have got significantly marked down, and PepsiCo came to a point where they saw this was a cheap asset. We'll have that, thank you very much. Perhaps it's important to forget our assets are still worth something.
Sure. And I mean, at a 56% premium as well, that really tells you quite a bit. It's about $1.7 billion where PepsiCo is looking to buy into Pioneer Foods. The likes of Ceres Juice, the likes of Wheat Beaks as well, all under one umbrella. Will certainly be quite interesting to see what happens there. Well, that brings an end to, of course, just how this market segment is looking. Warwick Lucas from Galileo Capital had joined us in studio for that chat. My colleague Diabo Sito is coming up right after.